hypocritical for a Bitcoiner to say, Bitcoin's for all, Bitcoin empowers the individual, but kick BlackRock out.
But what's the right balance, Jack? Right? What's the right balance between individuals? You don't. Okay, that's a great answer.
No,
it's a very honest answer.
No, I have an opinion, but again, a common theme here is my opinion doesn't matter. What is important is that as a free market proponent, an activist, I should express my opinion, not only through my voice, but through my time, my energy, my effort, my labor, my capital. And I'm doing that. I've built Strike, I've built 21, and if I'm wrong, I will fail. And that's good. And if I'm right, I will have more capital and more money and more time and energy to continue to vote with what is more powerful than words. Words are... Unfortunately, people have a lot of words for me, but the exchange rate in words to Bitcoin is 0. I can't stack any sats with your words, with your opinions, with your ideas. You gotta do the proof of work. That's the only reason this thing works. And so my opinion is Bitcoin's owned with us. We did it. You cannot corner a market. In order for them to get over 50% of this asset, I think it's too far gone. You'd have to bid this thing. There aren't 50% of it for sale. I don't believe that. You'd have to bid it to such a fiat price where I wouldn't exchange fiat for it anymore. So I think Satoshi solved that for us, and we have to compete in the free market as we should. It's antithetical to say it's for the people, it's distributed, but I don't like Larry Fink. Grow up, shut the fuck up.
You know, the thing that I like the most, Jack, is because Twitter is loud, bro. You know, tweets are cheap, right? But actions are expensive, and ultimately, you're putting your neck on the line, right? You and your business partners, you're putting your neck on the line. You're putting your reputation on the line. So one thing is to have an opinion, but one thing is to actually, you know, judge not the man in the arena. One of my favorite quotes, right? So you got into the arena with your business partners, with Tether, and at the end of the day, the markets are going to decide what happens. Personally, I'm extremely bullish. I think that treasury companies, which we can't define, I think are going to perform. They're going to get a little bit smacked a little bit when we're in a bear. But in a bull, I think they're going to actually outperform the price of Bitcoin. That's my perception of it.
To sacrifice the satisfaction of now to build a better later. And so our time and energy is money in an abstracted form. And so a government's ability to monopolize that, it's the closest thing we've ever seen to time travel. They are printing human time and energy. And if my money is a reflection of my time and energy, then their ability to debase it is by proxy their ability to debase and devalue me. You get less housing. You get less energy. You get less family. You get less food. It is, and the fact that they can borrow money they create from the future is time travel. They're pulling forward human labor from my kids. And so the biggest losers are the
one is amazing. Huge fan. What are some things that you have learned along the way that, you know, looking back, you're like, you know, maybe I could have done something different. Maybe I should have, you know, taken a left and not a right, or taken a right and not a left.
Yeah.
Maybe I shouldn't have sped here and should have slowed down. What are some lessons that you've learned as an entrepreneur? Dude, you're quite young, bro. You're like 2 years younger than me. I didn't even know that. Thought we were the same age. What are some lessons that, you know, if you had a time machine, you could travel back and be like, yo, Jack, dude, don't do this.
Yeah. I'm sensitive because I know we don't have unlimited time up here. I could tell you guys a lot of fucked up stories, but I think to me it goes back to ego, proof of work, lowering your time preference, and I think, again, I think the truest expression of being human is being part of something bigger than yourself and being part of something that will last longer than you will. I had to learn a lot, and the most real painful lessons I learned was my job as an entrepreneur. I thought my job was to predict the future and tell you guys what the future was going to be, what you want, and effectively like command, like I was like, Lightning Network is going to do this, countries are going to do this. Everyone else is wrong. I'm right. I'm a founder. My job is to predict the future. And it was an extraordinarily humbling experience where all of this is bigger than me. I need to shut the fuck up and just listen. I work for customers. I work for the people. I should listen more than I speak. And my job is to be a humble participant in what everyone else needs for the future. My job is to listen to you guys and build what you need and be profitable and put my money where my mouth is. And so that was the biggest lesson. And again, it goes into proof of work, ego, being part of something bigger than myself, and hopefully building something that will last longer than me. And once we did that, we've became a tremendous success relative to what we were. And that was like a very real growing up moment for me. I feel like as an entrepreneur, I became a man in that moment. And you said, if I could rewind time and do anything different, the last thing I'll say is I wouldn't rewind the time. The way I think about it is I had to learn a lot. And it was super painful. It was like some of the hardest years of my life. But I don't regret it at all because I don't know how else I could have acquired those lessons as if they were assets. How else could I have acquired those lessons cheaper?
And see how we topped on apathy rather than euphoria. But there's actually another way that we can measure what's going on in the crypto space and to help us better understand why this is how it played out. So why did we top on apathy rather than euphoria? It looks a lot more like 2019. But for the first time, we can look at it on this website, the Into the Cryptoverse website, through the lens of liquidity. So we have published a liquidity risk model, which is essentially derived from various key US macro liquidity inputs. We're looking at policy rates. You can see it right here. We're looking at policy rates, yields, dollar strength, central bank liquidity, and funding stress. Micro cap stocks bleed to the Mag 7, the Magnificent 7. If you think about it, the entire cycle has played out like this. When liquidity first started to get tight, altcoins bled to Bitcoin. Okay? So it starts to lead to Bitcoin. Then as we progress, and then Bitcoin's bull market comes to an end, then Bitcoin starts to bleed against the S&P 500. It starts to become obvious that the price of Bitcoin is bleeding to the S&P 500. Then it becomes obvious that the stock market is bleeding to gold. Now, the stock market had been bleeding to gold, but it becomes a lot more obvious as gold then goes parabolic. So you have altcoins that are bleeding to Bitcoin, Bitcoin that's bleeding to stocks, stocks that are bleeding to metals. So you can see we're working our way down the risk curve. So at first, when there's all this excess liquidity in frothier assets like altcoins, that first fire. Eventually, you reach a point like you did in 2019 at essentially nearly the same dominance levels, where dominance starts to fade a little bit as Bitcoin goes into a bear market. And the reason is because all that liquidity, that excess liquidity from the altcoin market had been extracted already. And so by the time that Bitcoin rolled over, you got a very crazy event like what happened on October 10th of 2025, where you had this like massive liquidation. The reason that kind of stuff can happen is because underneath the surface, altcoin liquidity was very, very low already. So it was already a very fragile environment. And then once October 10th happened, when Bitcoin rolled over, liquidity conditions change. They become a lot looser. And then once they're back down here in the very loose conditions regime, that's when the higher risk stuff starts to outperform. But what's happened is a lot of people this cycle tried to manufacture an alt season by talking about liquidity and talking about things like M2 and other things. And those things are not a good indicator for what's going on with the underlying liquidity. There's a really great chart that really, really does a good job of explaining liquidity apart from M2. And I want you to take a look at this. It's called net liquidity. So we're going to look at global net event that'll lead to a scare, a crisis, more than likely. And that will lead to the justification for liquidity becoming a lot looser. One of the risks that liquidity has right now of not necessarily dropping as quickly is the dollar. The dollar, if it were to start going up like it did in 2018, that would be very bad for liquidity coming back down. Like that would likely send liquidity conditions into, that would keep them tighter. So when you think about, if you want a reason, if you want a narrative to figure out like why there was no rotation from altcoin or from Bitcoin to altcoins, and you want to avoid making the same mistakes in future cycles, I think this is a great chart to look at. Look at the liquidity. That is how it plays out. So the reason you haven't had that rotation is because in prior cycles, when we had that rotation, monetary policy was really loose. This cycle, monetary policy has been very tight. So perhaps next cycle, the 2027, 2028, 2029 cycle, perhaps will happen under looser monetary policy conditions than what we've had today. But I think this is a really interesting chart, and I will be using this chart going forward to try to talk about the markets. We've already been referencing this chart. We've already referenced global net liquidity. We've had that indicator on the website for a while, and we've talked about the dollar. We've talked about the Fed funds rate relative to the 2-year yield, and we've talked about the yield curve and other funding stress proxies. We've talked about all that stuff. Now we've integrated it into a single liquidity risk model to help understand the flows from higher risk assets to lower risk assets. And you see this liquidity risk model come back down to the lows, I think that'll be instrumental in helping time the start of the next business cycle, right? The start of the next business cycle. So let me know what you guys think about this chart. I think it does a really good job of kind of explaining what we've been talking about the last few years. If you want to get access to it, you can get access to it. Just go to intothecryptoverse.com. You can use code ITC50 to get 50% off your first month. And if you want to read about, some of the other macro things we talk about and how they're affecting the markets, head on over to benjamincowen.com, go to reports, and you can get the latest macro risk memo that we published on February 15th. Of 2026. We also have one on January 15th, 2026. And if you want to get some things wrong, but this is kind of how I want to, structure things, is have the YouTube videos there, but also provide my thoughts in a monthly memo. And January, it was primarily crypto focused. Last February, it was primarily macro focused. Next month, it'll probably be something else. Maybe we'll talk more about metals. And then probably in April, we'll go back to talking more about crypto. And we'll kind of just cycle through. But make sure you check that out. You can get on the mailing list if you want to receive those reports, and they're absolutely free if you want to get them. I do put a lot of